To round off a week of ups and downs for cryptocurrencies, it was a low-volume Friday. Traders pressed the sell button during a 2-hour sell-off after news from China, until the selling leveled off. Bitcoin, the world's biggest cryptocurrency by market cap, was down 9.7% as of press time Friday. BTC was trading below both the 10-hour and 50-day moving averages, indicating a bearish warning for market analysts. According to Bitstamp spot numbers, BTC is set to drop 20% or more for the second week in a row, putting it on target for a 37% drop over the 2-week timeframe, matching the market bloodbath of March 2020. A comment from China's State Council on BTC was the key cause for the drop on Friday. We can clamp down on Bitcoin mining and trading practices and keep individual threats from being passed on to the whole community. Within 2 hours, Bitcoin dropped from $41,454 about 14:15 Coordinated Universal Time to as low as $36,880, an 11% decrease, based on Coindesk 20 results. As of press time, Bitcoin was trading at $36,224. I expect BTC, USD to hover about $38,000 for a while, said George Clayton, managing partner at Cryptanalysis Capital, an investment fund. Following Wednesday's 2021 high-volume day for Bitcoin, Friday is shaping up to be a letdown going into the weekend. Based on Coindesk researchers' data on 8 major spot Bitcoin exchanges, volume on Friday was about $4 billion, down 75% from $16 billion on Wednesday. Consolidation, a time of low volume and eventual price discovery due to a shortage of liquidity, according to Neil Van Wee, Director of Sales and Institutional Trading at crypto market maker BlockFills, may be a market driver this weekend. I'm expecting any restructuring where shares might have recently split away from, said Van Wee. I believe the market is digesting the downward step in a reasonable manner, and we will soon realize what it needs to do next. About 16,700 BTC is based on a $50,000 strike price in the Bitcoin futures sector, which has the largest open interest. The spread between puts and calls, on the other hand, is nearly even. A put is a privilege, but not a requirement, to sell an item, while a call is a right, but not an obligation, to purchase an asset, all under a fixed time period defined as expiration. It's an intriguing development since Bitcoin hasn't traded at $50,000 in about a week, and it may be an indication that wise options traders are taking both sides of the exchange at that point. Open interest does not mean directionality, said Vishal Shah, the operator of the crypto derivatives exchange Alpha 5. The 30-day volatility of 10 well-known crypto assets on the Coindesk 20 has all risen since the beginning of April, including Bitcoin. The price of Ethereum Classic and Ether, on the other hand, is in the stratosphere of crazy price swings. As of Thursday's closing results, both assets had over 30-day volatility of 250%. The aspect that sticks out the most is that uncertainty has recently soared, with several assets seen over 200% realized, which is massive, said Rich Rosenblum, president of crypto market maker GSR. At the same moment, BTC uncertainty is higher than it was a few weeks before, but it's still low compared to the rest of the market, remaining under 100%. ETH's DVOL index, which is a volatility indicator close to conventional markets VIX and monitored by options exchange Deribit, is up to 180, according to Greg Magadini, CEO of Genesis Volatility. It reached a new peak of 190 on Thursday. He claims that realized uncertainty, which he calculates by looking at past returns, is already factored into the economy. Volatility is known to cluster, said Magadini, notwithstanding the fact that we've come down from peak realized volatility seen in the past few days, over plus 300%. All expirations are priced in above plus 100% implied uncertainty, with near-dated options pricing in about 150%. As of 2100 Coordinated Universal Time, Ether, the second largest cryptocurrency by market capitalization, was traded about $2,363, down 15.5% in the previous 24 hours. The commodity is trading below both the 10-hour and 50-day moving averages, which is a bearish indicator for market analysts. According to Coindesk 20 results, Ether dropped from $2,740 at 14:15 Coordinated Universal Time to $2,426 at 16:15 Coordinated Universal Time, 12:15 p.m. Eastern Time, a $314 drop. As of press time, ETH was trading at $2,363. After recent price drops and uncertainty spikes, Nick Mancini, research analyst at crypto sentiment analytics company Trade the Chain, says big blockchain assets including Bitcoin and Ether are still seeing favorably. Going forward, amid all of the recent turbulence, long-term sentiment scores for most crypto, particularly Bitcoin and Ether, are still strong, in the 70s, Mancini says, which implies the bullish argument remains intact. The bullish theory might be holding up in the long run, but traders have evidently lost faith in Ether in comparison to other cryptocurrencies. Ether's market domination, or its share of the overall cryptocurrency market, has begun to dwindle. Since reaching a 2021 peak of 20.61% on May 15, ETH's domination has begun to wane, with a share of less than 18% and a drop of 2% in the last 24 hours as of press time.